Well, Indian markets are at record high levels. A lot of liquidity flow coming in the frontline index and the mainline market, but there's a lot of frenzy per se in the SME world as well, and that's what the SEBI, was also talking about yesterday, wherein they came up with some regulations to regulate the SME indices and IPOs better. But let me take it across to Sharad first and get an understanding as to how do the numbers stack up. Sharad, talk to us about the numbers of SME IPO that we have seen so far. What's been the listing scenario and what's been the overall subscription figures for some of these?
Well, yes, if you look at the subscription levels on the SME space, there has been a lot of actions. HOAC Foods, India, KC Energy, and even Medicament Organics. These stocks you see, look at the subscription numbers, they are in thousands. And also their sizes are very small. So you can understand for companies like Max Posure, Medicament Organics, almost 1,000 odd crore rupees of proceeds are expected to come in because the issue size was so less. Also, Magenta Lifecare makes it to the list. These are very small issue sizes, but because of very strong book running, the numbers, the subscription numbers are very astronomical. Now, let's look at the top 5 SME IPOs in 2024, which has gained in terms of performance. OMPPL, which is OS Metal and Minerals, that has gone up 1,472%. Australian Premium Solar is roughly 800% returns to the SME investors. TAC Infosec, Alpex Solar, these stocks, if you look at it, more than 600% gains coming in. Refractory Shapes also makes it to the top 5 list of 2024 with almost a 500 plus returns. Now, there are some IPOs where there have been a big losers as well, and that is the area of cause of concern which I like to point out. Baweja Studios, the losses of almost 53%. MBK Agrofood, there also has gone down by 52 odd percent. Polysil, Varia Creations, these are smaller names and there's a massive wealth erosion for investors. The losses ranging between 39 to 40 odd percent, and even Falcon Technology is coming to the list in the SME space, where almost a 38 to 39% down growth has been there. Now let's look at the SME IPO, how it has actually shaped up over the last 5 years, number of issues. And
now let's understand what essentially is happening in the entire SME IPO space. In 2020, there were 27 SME IPOs. Peak of COVID, guys. Understandable, 27 IPOs. 2024, that number, and we are not done with the year, that number has gone to 163. So there is clearly a mad rush of the activity which is happening in the SME IPO. The purpose of capital market is to provide capital for a company to grow, which is called as growth capital. That is the purpose of capital market. The idea of SME IPOs is that companies which are not able to really which need growth capital, they go for SME IPO listing. But there are concerns about the way entire SME IPO market and the prices are moving. Small IPOs are getting massive response. And I'll just put some names out. Official data, which is available in public domain. HOAC Food India, 5 crore is the issue size. Subscription number 2013. KC Energy and Infra, you have to read the names again. The total issue size 15 crore, subscription number 1052. And it just doesn't end there. After that also, if you look at issue price versus the gains have been absolutely astonishing, which is in case of Refractory Shapes, Alpex Solar, TC Infosec, the gains have been anywhere between 1500% to about 500%. So you could ask yourself, what is going on? Is this frenzy? Is this perhaps bad quality business which are now hitting the market? Is this sheer ignorance by investors, or in some cases the merchant bankers which are taking the companies public without understanding risk and management? In financial market, you always have to buy good business which is available at a reasonable price. Right now, there is a bubble and a trouble brewing in not everything. Excesses in the SME and the IPO market is something which is evident. It is like saying bronze or silver is trading at the price of diamond. So you just need to be a bit careful. And one, in a sense, merchant banker, call it coincidence or a pattern, has taken some companies public. Well, when you're applying in an IPO, the whole risk management needs to be done by the applicant, but vigilance is something which is also important, and intention is something which is also important. I'm putting data in the public domain, which are the companies Share India as a broker has taken public. So whatever SEBI is doing, one of the key fiduciary responsibility of the market regulator is to keep the market safe and protect investor interest. And that, I think, as a channel, we fully endorse in terms of the word of caution which is coming from the regulator when it comes to SME IPOs and the frenzy there. I would like to remind our viewers that we all know this game called musical chair. When the music is on, everything looks good. When the music stops, you will be lost, you will be caught without a chair. And that is what is the risk in this entire action or euphoria or bubble or trouble which is brewing in the market. Lot of investors have come post-COVID. The demat number has gone from 6 to 11 crore. Price is something which will always be the attractive fact why you would like to go to SME IPO. But never ever lose the sight of risk, valuations, and what is coming in terms of the profile of the business. All I'm putting is simply putting facts on table. Why are some of these merchant bankers taking some of the companies public? I'm going to take this conversation forward because this is relevant, this is important, this is crucial. Gives me great pleasure to bring on board two gentlemen I've known from years, Ashvin Bhai and Mr. Gupta. Good afternoon.
Good afternoon.
I gave a very long introduction, but I'm assuming whatever I have flagged off in terms of what is happening in the SME IPO, it is not bubble, but it is trouble. It is euphoria. Am I right in my assessment? Gentlemen, over to you. Anybody can pick it up.
Okay.
Yeah, sure.
So, Nikunj,
Yes, please.
first of all, thank you very much for having me. And you have put it very brilliantly, the example of musical chair. So today the situation is when you have a SME IPO, everybody feels that if I don't apply here, I may lose. They don't know even after allotment they may lose. So the issue is very clearly, as you said, that euphoria has been created and everybody wants to see, because when I tell my neighbor that, oh, I made a 15 times gain in this IPO, SME IPO, he gets excited that if JN Gupta can make it, why can't I make it? So it is the chain reaction which is happening and everybody is rushing to that. But having said that, I would say that regulator is doing every possible thing. Right from beginning, when the SME concept was introduced in 2010-11, we were SME was very clear that this is not an area where ordinary retail investor must invest because of risks involved, because of lack of information which is available in case of main board IPOs and main board companies. And on the other hand, in order to encourage SME, there were relaxations given as compared to main board. So there was some try to balance market development as well as market regulation and protection. But unfortunately, what has happened, whatever you may do, the greed is such that it drives people to harakiri. And that is what is happening. And I will ask Mr. Parekh to elaborate much beyond what I have done.
Supplement that point, Mr. Parekh, Ashwin Bhai, that the word risk has taken a back seat and the word greed has come out. Do you think more than anything else, there are going to be checks and balances which need to be done at every level, whether it is investor education or whether it is brokers who are taking these IPOs public?
It's at all levels. Nikunj, correctly. I suppose everybody has to really play a role in this. I mean, the regulator has started just with a cautionary note, but I suppose it has to go a little further than that. I mean, and we'll come to that a little later. Let's look at the macro situation. There is a FOMO effect over here, clearly. the fear of missing out. There is a huge amount of demand for securities, which is chasing the supply at the moment, and I suppose the shift began not only in case of SME, but I suppose the overall market also. From the day somehow or the other, we saw a shift in deposit taking from banking, from the household, let's say savings, a shift towards capital markets. And then we see now what we're seeing is almost 23,000 crore of SIPs and almost about in the mutual fund space alone. I mean, 34,000, 35,000 crore every month going into that. So there is a huge amount of euphoria. There is a huge amount of craze actually. Fundamentals have been forgotten somehow or the other. So when we're just chasing the a small quantity of, let's say, stock or securities which is available in the market. When it comes to SME, however, the story is much more complicated. Now, here I'll tell you what seems to be happening, Nikunj. In addition to sort of, the IPO numbers which are getting, let's say, the response which is so many times more than the subscription, you also getting a sense basically that people are not really disclosing very well. I mean, look at the normal IPOs that you normally have for large and mid-sized entities.
Right, sir.
Compared to that, in case of SMEs, the extent of disclosure may not be adequate. I think we need to do something about that.
Disclosure is about, sir. Disclosure comes from the merchant banker, in this case, the broker. Are they disclosing enough? And if there are two examples to go by recently, and one IPO which in a sense was just got cancelled, I'm just going to use that sheet for my reference here. Pardon me right now. Archit Newwood. IPO delayed due to queries raised by exchanges, focus on companies' profitability versus peers, sudden increase in margins. Disclosure. This is disclosure which is getting compromised. So, Mr. Gupta, first things first, the merchant banker will get away by saying that it is a risk of the investor who's applying. But do you think it needs to be first really administered at the level of brokers and merchant bankers who are taking them public about disclosures? Do you think that is the biggest thing where it needs to be fixed? Because a lot of firms now have made this as the main business.
I will tell you there are a couple of things in this. The first is very clear that the level of scrutiny and level of disclosure which are expected in main board IPO are very high as compared to SME IPO, because right from beginning, in order to encourage SME and not burden with their same compliance level as was applicable to main board IPO, there was a relaxation given that. Now the problem that is happening, the relaxation has become such that you are doing away with everything and putting everything which is possible into the public domain and say this is an IPO. Now here comes the responsibility of the individual. Say for example, if I am there or Mr. Parekh is there, we will first ask a question: am I comfortable putting my money in this IPO or not? Only when I get this comfort, I will take up that IPO and market it. The problem is this: we at present merchant bankers or whatever who are marketing, they are marketing it for business only, not marketing it for making a real good investment proposal for the thing. The second issue that is here, that in SME IPO, the vetting of IPO document is done by exchanges, relevant exchange. If it is on NSE, it will be on NSE. If it will be BSE, BSE is doing it. Whereas in main board IPO, since it is much more disclosure based, it is vetting is done by SEBI. So as it is right from beginning, the investors are told that look, your risk is higher because this document has not been vetted by SEBI, it has been vetted by NSE or BSE. So that is one indication. The second and most important thing is very clear that I always say that whatever I and you do, whatever channels do, whatever SEBI do, whatever exchanges do, investor education, nothing is becoming effective because greed overpowers that. And I always give a very simple example. Have you ever seen people buying vegetable in the market? They buy vegetable, examining each and every piece of vegetable, although the vegetable will get finished in a day. But when it comes to investment, I don't even touch that and I go by what somebody else says, whereas it is my lifetime saving that goes into the investment. So the issue is very clear that no one again, the example is that you can bring the horse to the pond, but you can't make him drink the water. So you can do all dissemination of education material, but you can't make people read, imbibe it, and follow it. That is the problem.
That's the problem, Mr. Gupta, that we have been facing for quite a while, and that's why investor education is something that we at ET Now have been championing as well. We let you go, Mr. Gupta. We understand that you have other engagements as well. But Mr. Parekh, if I had to ask you about setting the fiduciary responsibility here, we are, yes, talking about how the risk at the end of the day lies in the hand of the investor. But do you think there is a fiduciary responsibility of the merchant bankers, exchanges, as well as SEBI here as well, that they need to strengthen what is needed with respect to the regulation for merchant bankers as well? I was reading a report that came yesterday that SEBI is looking at perhaps strengthening the norms for merchant bankers and has given itself powers to cancel the merchant banking license under the new proposed norms. If you've gone through these norms at all in the proposals, what would be your comment on the same?
I mean, I totally agree with what Gupta sir said. You see, I'll tell you what. I mean, the regulator does have the responsibility, the fiduciary responsibility, clearly. Because if, let's say, retail investors suffer on account of whether you had a lot of dispensation for SME, let's say IPOs, or whether, let's say, the intermediation, that is, the merchant bankers did not play their part properly. I mean, finally, everything will really go back to exchanges and the SEBI, basically. So, in which case, I would still believe that the norms will have to be far more tighter. We come to, let's say, the second set of people, the merchant bankers, and after that, I'll come to even the use of media, the social media, let's say, in creating rumors or in creating a certain order of misinformed kind of, a status in regards some of these IPOs and some of the responses to these IPOs. I mean, from the merchant bankers' point of view, quite clearly, we've seen that the whole thing is actually the dispensations are getting misused quite clearly. I mean, what was created at one point in time to assist small businesses to raise the capital in the market is actually getting misused, and there is enough evidence of that. So, I mean, right from like forensic audit to a clear sort of, penalty or punishment to the merchant bankers. I mean, SEBI pulls up in the main course IPOs, for example, SEBI pulls up the merchant bankers, for any error or any wrong disclosure. I think some extent of that is essential over here as well. And the third and the most important is misuse of social media. Now, there are enough regulations which suggest that if any company finds that there is an information on that company which is not true, which is either a rumor or it should become the responsibility of that company to very clearly put out in the social media, suggesting that anything to do about profitability of that organization, which there is a misuse of information or a rumor, then it must be denied very clearly, sort of, So I suppose we'll have to get to a point where regulator, merchant bankers, and the issuers themselves, of course, to start with, and then thereafter, the media, social media particularly, will have to really play a significant sort of place. Otherwise, what may happen is what was intended to be a good reform because of the misuse, may either close down or I mean, for example, if the investors suffer and they suffer very badly, then they will never look at, let's say, SME IPOs thereafter, basically. So I suppose this is a good time really to take care of these things. Otherwise, a good market created, let's say, would all sort of, really have a bad name and get closed, basically.
No, you're right, Mr. Parekh, because memories like these scar investors for a long time as well. And here's hoping that perhaps the norms will be strengthened. People will do a lot of self-regulation, whether it's merchant bankers or, other promoters as well. And there will be no loss to the investors, because that is all we are all working towards, that the investor education and the investor, protection is paramount. Thank you, Mr. Parekh, for making time and speaking with us on this important subject.
If you like this video, then like, share and subscribe to ET Now.